Hey, welcome to my channel Investment Research. I am an equity research analyst, and today we are going to discuss and analyze the stock BigBear.ai Holdings Inc., ticker symbol BBAI. The key question we will explore is this: will BigBear.ai be worth more than Palantir 10 years from now? To answer that question, we need to look closely at the company's background, its financial performance, valuation metrics, competitive positioning, and growth opportunities. We'll also highlight the major risks investors should be aware of. By the end of this analysis, you'll have a balanced perspective on whether BigBear.ai deserves a spot in your portfolio. BigBear.ai is an artificial intelligence and machine learning company headquartered in Columbia, Maryland. It became a public company in December 2021 through a SPAC merger at a time when AI-related businesses were gaining strong investor attention. The company describes its core offering as decision intelligence. What does that mean in practice? Essentially, BigBear.ai uses AI-driven analytics and predictive modeling to help organizations make complex decisions. Think about scenarios like military logistics, predictive maintenance for defense equipment, fraud detection, or supply chain optimization. These are areas where massive amounts of data are generated daily, and BigBear.ai builds models that turn that raw data into actionable insights. The customer base is heavily skewed toward the US government. Contracts with the Department of Defense, intelligence agencies, and related entities account for about 70% of total revenue. The rest comes from commercial customers in healthcare, manufacturing, and logistics. This positioning places BigBear.ai in the same general category as Palantir, which also provides AI and data-driven decision platforms. But while Palantir has already established itself as a giant in the space with a market capitalization over $40 billion, BigBear.ai is still a small cap company valued at less than $1 billion. That size difference is critical because it creates both risks and opportunities. The global artificial intelligence market is projected to exceed $1.5 trillion by 2030. Within that broad landscape, BigBear.ai is targeting defense and intelligence, healthcare, logistics, and cyber analytics. Let's take defense first. The Department of Defense is rapidly increasing its investment in artificial intelligence and autonomous systems. According to budget reports, US defense spending on AI could exceed $15 billion annually by 2030. That's a large and growing market, and BigBear.ai already has a foothold thanks to its current contracts. In healthcare, the opportunity is equally attractive. Predictive analytics can reduce costs, improve diagnostics, and optimize hospital operations. Healthcare AI spending is projected to grow at over 40% CAGR this decade. BigBear.ai has made initial moves in this sector, though it remains a small part of revenue today. For logistics and supply chain, AI-powered decision intelligence is becoming essential. From global shipping companies to e-commerce giants, organizations need real-time insights to manage disruption, shortages, and demand forecasting. Again, this is a natural extension of BigBear.ai's expertise. So while Palantir has more recognition and a broader commercial base, BigBear.ai is carving out a niche in high-value, high-security markets that have strong demand for data-driven decision-making. From a valuation standpoint, BigBear.ai currently trades at less than 2 times sales. That's a very low multiple compared to other AI peers. For context, Palantir trades at over 15 times sales, and even smaller AI companies typically trade at 5 to 10 times sales. This low valuation reflects investor skepticism. The market is essentially saying we don't fully trust that BigBear.ai can scale profitably, but for contrarian investors, this discount could represent an opportunity if the company executes well. If BigBear.ai can sustain double-digit growth and move toward profitability by 2026, the stock could see significant multiple expansion. Even moving from 2 times sales to 4 times sales would double the stock price without any additional revenue growth. Let's put BigBear.ai side by side with Palantir for a moment. Palantir 2024 revenue was over $2.5 billion. BigBear.ai revenue was $650 million. Palantir enjoys 75% gross margins. BigBear.ai is at 27%. Palantir is profitable with positive free cash flow. BigBear.ai is not. So, on the surface, Palantir looks like the safer bet. But what about growth potential? Palantir already has significant market penetration. Its future growth depends on commercial expansion and new industries. BigBear.ai, on the other hand, is still small, meaning it has more room to grow if it can secure larger contracts. Think of it this way. Palantir is like the established blue chip of AI decision platforms, while BigBear.ai is more of a speculative growth stock with higher volatility. No equity research report is complete without highlighting the risks. First, customer concentration. Over 70% of revenue comes from government contracts. If budgets are cut or contracts delayed, BigBear.ai's revenue could decline sharply. Second, profitability risk. The company is still losing money. If losses persist, the company may need to raise capital, which would dilute existing shareholders. Third, competitive pressure. Palantir, Microsoft, Google, and others are also targeting government and defense AI markets. These giants have far greater resources, which could limit BigBear.ai's ability to win big contracts. Fourth, stock volatility. Since going public, BBAI shares have experienced extreme swings, sometimes moving 20 to 30% in a single day based on contract announcements or earnings results. Investors need to be prepared for high volatility. Let's play out 2 scenarios for the next 10 years. In the bullish scenario, BigBear.ai successfully expands beyond defense into healthcare and logistics, achieves profitability by 2026, and grows revenue at 15 to 20% annually. By 2035, revenue could reach $3 to $4 billion. If margins also improve to 40%, the market might value the company at 8 to 10 times sales, implying a market cap of 30 billion or more. That would be a massive return from today's valuation under 1 billion. In the bearish scenario, growth stalls, government budgets tighten, and competition squeezes BigBear.ai out of key contracts. In this case, the company might remain a subscale player, struggling with profitability and eventually being acquired at a modest premium. The truth likely lies somewhere in the middle. Investors should understand that this is a high-risk, high-reward stock. So, will BigBear.ai be worth more than Palantir 10 years from now? The odds are against it, simply because Palantir has already achieved scale, profitability, and a global commercial footprint. But that doesn't mean BigBear.ai has no potential. For investors willing to tolerate volatility and uncertainty, BigBear.ai represents a speculative play on the future of decision intelligence and AI-powered analytics. If you are a conservative investor, Palantir or other established AI leaders are likely the safer choice. But if you are aggressive and looking for asymmetric upside, allocating a small portion of your portfolio to BigBear.ai could pay off big if the bullish scenario plays out. And remember, the key with high-risk investments is position sizing. Never invest more than you can afford to lose, and always balance speculative bets with stable core holdings. Thank you for watching this deep dive equity research analysis on BigBear.ai holdings. If you found this breakdown helpful, make sure to like the video, subscribe to the channel, and hit the notification bell for more in-depth stock research and analysis. It's at under 2 times sales, which is cheap compared to peers like Palantir at over 15 times sales. This discount could mean undervaluation if growth continues, but it also reflects concerns about profitability. The stock is highly volatile, with a beta above 2 and frequent daily swings of 5 to 10%. For traders, that volatility can create opportunities, but it also increases risk. Technically, the stock has been range-bound between $1.50 and $4. A breakout above 4 could bring momentum, while support sits near $2. Institutional ownership is around 25%, and insiders hold a meaningful stake, which shows some confidence from both professionals and management. In short, BigBear.ai works best as a speculative, small allocation for long-term investors and a high volatility trading vehicle for short-term traders. Always remember to size positions carefully and manage risk.